Let's take a look at Bitcoin because we're seeing some resistance around 50,000. It briefly traded above that level, but hasn't since been able to break back above it. So we want to talk about all this with Ali Leach. He's CoinDesk's Learn editor. And Ali, we can't seem to hold above 50,000 today. We're trading just around, was that 48,000, just below 49,000. Why are we seeing resistance at this level?
Yeah, we seem to have hit a bit of a wall at that sort of big psychological level. There's been some overbought signals on Bitcoin's price chart, some profit taking in the Asian trading session. And there's also been a notable spike in exchange inflows over the last week. So we've seen almost 30,000 Bitcoin move to exchange wallets, which is typically bearish. You know, it's a sign that investors are looking to sell their Bitcoin in exchanges. We've also seen whales interestingly reduce their Bitcoin holdings over the last week. And also there's actually a 14% discount on Grayscale's Bitcoin Trust. So there's a bit of a low demand right now. Could be, you know, traders are hesitant as Bitcoin kind of looms around that 50K mark. There's usually an expectation of people selling. It could just be a temporary pause in the uptrend. There's actually a few positive things coming out this week. We've seen MicroStrategy, for example, buy $177 million more of Bitcoin. So there are a few things to help it on. We're just waiting to see what happens.
Ali, is there a way, and this question may betray my ignorance of Bitcoin trading, but is there a way to figure out if we're seeing just one large block of movement into those wallets, or is that something that's not data recoverable?
Yeah, so with the on-chain data, so there's absolutely tons of metrics, but what you can look at is the number of Bitcoin, the supply of Bitcoin that is moving between wallets that have between 1,000 and 100,000 BTC. So these are kind of the main whales that we're looking at. And that gives us an idea. We can see the supply moving into whales. We're seeing them accumulate. If we're seeing it leave, then obviously they're starting to sell on exchanges. They're starting to move that around. It's usually a bearish signal.
Ali, overall, would you say the sentiment, though, around Bitcoin, has it improved? Has it significantly improved? I mean, how would you compare it to 6 or 8 weeks ago?
Yeah, absolutely. I mean, we've kind of shaken off all of that Chinese mining FUD now. We're starting to look really promising. That talk we had a few months ago now with Elon Musk and Jack Dorsey and those guys, it really started to help to move the market. Sentiment's starting to improve, but we were doing really well. You know, we're up quite a bit now since we hit, but as soon as we hit that 50K mark, that was when everything started to unravel. There was a little bit of uncertainty. And like I said, you know, people are just kind of waiting to see what happens at this stage. And I think if we can break above this, then I think there's a case to be made that will continue back towards its all-time high. If it crashes beneath this, then we may sort of see some more sort of lower trading bearishness.
And the movement we're watching, is it the whales who are moving, or is it smaller than that? Because you had said that would be a bearish indicator.
Yeah, a lot of the institutions sort of drives the main trends that we're seeing now. I mean, there's a few positive indications that things are starting to pick up. But if you're looking at the on-chain stuff, and we're seeing money move out of these sort of whale wallets, we're seeing them move to exchange wallets, which usually suggests that, like I said, they're starting to sell on these exchanges. There's a lack of confidence in the market. So these are the sort of things we usually look at, and it's usually institutions that drive the main trend. Retail traders, particularly sort of speculative, jumping in on FUD and FOMO, they'll be jumping in to kind of extend that rally, or they'll also extend the downside rally.
A couple of big companies, Ali, moving into the NFT space. Visa was one of them. Budweiser also getting in on that. And when you take a look, I guess, at the trends that we've been seeing over the last several days, it seems like the NFT space is back and even seeing a second wave. What do you think is driving some of this excitement?
It's been a really interesting couple of weeks, and I think, you know, like you said, Visa's now bought its own CryptoPunk. We've seen Budweiser jump in, and these are companies starting to use NFTs. They're recognizing its potential as marketing tools. We saw companies like Slim Jim and Snickers do this a couple of months back, but now, yeah, they're really starting to take off again. I think GameFi is really starting to help this NFT, this sort of second wave, like you said. And what this is basically is like the convergence of DeFi, NFTs, and gaming. We've seen this with games like Axie Infinity and Crypto Blades. And what it basically is these gaming companies are cottoned on to using these NFTs and cryptocurrency, and they're actually helping players earn money. It's a a play to earn model, where people have characters. These characters are NFTs. You level them up. You can sell them on these marketplaces. You can earn actual cryptocurrency just for playing. And so it's rewarding gamers with this kind of new model, and it's also helping gaming companies. We've seen a number of companies, before they've even developed the game, sell land and in-game items and things before the game's been developed to help kind of raise capital. So, you know, it really has the potential to disrupt the gaming industry now. I can't see why people would play for free when you can actually earn cryptocurrency instead.
What do you think? Do you personally? I don't know if you're allowed to share your personal opinion, but NFTs. I mean, for one of those, the Pet Rock NFTs, it was in excess of $600,000. Is there a greater fool out there who's going to pay more?
It comes down to what you perceive as value. I mean, The Rock, yeah, I mean, you look at that and it's no Andy Warhol painting, but, you know, it's the same as anything, you know, why is the Mona Lisa worth over nearly $900 million? Or why does anything have value? And you know, with these CryptoPunks, they have some innate value. These rocks, for example, it's really what value people attribute to them. They're scarce, so they have that kind of supply-demand thing that usually drives value. It is kind of pushing the limits of what we perceive as value. It's an interesting kind of use case for what we think is valuable. Me personally, I'm not a big fan of the rock thing. I don't really understand it. But then we're seeing these CryptoPunks sell for over $1 million, and these are just pixelated images of characters created through an algorithm. So it's challenging a lot of people's views on finance.
Ali Leach, always great to speak with you. Thanks for taking the time. We'll talk with you again next week. CoinDesk's